and good afternoon, everyone. I'll give everyone a few seconds to settle down. Okay, good afternoon, everyone. Really excited to be here on a very important topic for a country like India. We have talked about customer experience, we have talked about digital, we have talked about a whole bunch of topics, but when we talk about India, we can't complete a conversation about financial services without touching rural. And when it comes to financial services in rural, India has gone through a significant transformation over the last few years, and we expect another decade of transformation as urbanization grows, as a whole lot of technologies come through. And we have a very esteemed panel over here. All of them see deeply into rural business models. They have fairly, between us, I think between this panel, probably 50 years of experience, over 50 years of experience of how things work in the rural financial services in India. So with that, let me just take up. So traditionally, financial services penetration in rural areas has been challenging due to some factors. It was limited data, it was the overall reach, standard products being pushed into rural areas, fairly low ticket sizes, resulting in low margins, and overall high touch model, resulting in high cost of serving. But lately, what we have seen is with bureau data, with whole lot of digital trail of data, we have data being created in new forms. We have reach that is being solved through technology. We have new kinds of partnerships coming in with co-lending models, and many of them being, some structures being encouraged by the regulators and some coming up as different entities partner together, and increased digitization resulting in some of those challenges getting solved. And that has led to some customized products being created, more user-friendly experiences, vernacular language apps being adopted in the rural areas, and a whole lot of agri-tech companies bringing new business models. This transformation is a journey that India has sort of embarked on over the last decade or so. And the question I have for the for my panelist over here is, while these business models keep coming, where do you see such models evolving in India, and how much impact have they really made? So let me start with Mr. Baskar, right to my left. And so you have managed a microfinance and now a bank, and in that you have done partnerships, you have launched new technologies. Where do you see some of the rural financial services and the profitable business models being created there? How do you see this evolving over the next decade?
Thanks, Hemant. Earlier, when you all started microfinance, which were probably around 15 years back, the entire model was completely get in touch with the customer, physical. There was no data available. So the first bureau for microfinance was created in 2012-13, which was called Highmark. We all came together because the larger ones weren't in a position to handle it. As one gentleman here asked, the cost of transaction of getting a bureau data was extremely high. So we all came in together to start one which was specifically for microfinance track. That point of time, it really meant that if you have owning a customer, you actually own a customer full-fledged. You meet them to interact, to get the application, to process it, and everything completely was physical. And that was, say, 2012. And here, 2022, that is absolutely completely paperless, to a point where you meet the customer a couple of times during a loan tenor. We technically meet them, earlier used to be once in a week, now it's once in a month or maybe a little lesser frequency. But the fact is that the only time the customer wants to interact with you is when you're dispersing the cash. The subsequent interactions are what you are seeking and the customer isn't actually interested in. But that really kind of will change and really not required that the customer will have to keep meeting you. We used to have a half-an-hour meeting every week. Reluctantly, the customer, earlier they enjoyed coming in, but every week was a little bit too much. And they started borrowing from 2 institutions, which means we are spending 1 hour every week to interact, I would say, quote unquote, meaninglessly. This is because you wanted to really reach them. With all of the evolution really happening now today, it has become completely paperless. And hence, who owns a customer is that one who delivers a customer experience, not the one who is writing loan on their books. So to that extent, the finite possibilities of dealing with the customer directly has substantially evolved into infinite in terms of partnerships. And the trust factor in partnerships are substantially higher today. Nothing really works which is short-term in approach. So it is not possible. Earlier we thought that if I were collaborating with somebody else, you will take your customers off. Today I can give the entire list of our customers. I don't think you can go and just pluck and take them out, because the question in terms of how do you really deliver an experience, as one of our earlier panelists was saying, it is the experience of 1 in a million which goes wrong, which really matters in terms of customer, not what goes right in the remaining transactions. So we all started looking at it far more mature. To my left is Rishi. So we have a partnership. Payments Bank cannot hold deposits beyond 1 lakh earlier. Now it is more than 2 lakhs. So it has to be transmitted to another bank. They obviously would have had a choice of going with any bank, but the fact is that one new bank, which is a small finance bank, one new bank, which is a payment bank, we collaborated. Today, seamlessly, the money gets transferred from the customer account of FINO to us the moment it exceeds 2 lakhs, and we don't even have many people involved into it. That kind of a technology does really help, and probably Venkat will subscribe to it. There was a small WhatsApp video of India Post which is going around how AEPS transactions are happening. And you won't believe, many of this group, the WhatsApp groups, where some of us, the CEO group, says that, can you believe that you can withdraw cash without having a debit card, without going to ATM? That, I think, is awareness of what we are sitting here and understanding what has really happened. One is UPI, one is AEPS. With all of that happening, now that really required, the inflection point is to really take the partnership to scale. I think we are at the cusp of doing that.
So very interesting, background, and you talked about this whole partnership that you have with FINO, and I would love to hear about typically. Let me just. Some technical challenge, but. So what we have seen is 3 types of partnerships. We have seen partnerships at scale that bring large-scale acquisitions, and those could be with players that are present across the nation. Someone like, for example, IFCO comes to mind, or some similar players who have been entrenched into rural ecosystem. We also see a lot of local level partnerships, and those local level partnerships are basically are players who know their communities well. You can integrate specifically into their value chain. And then there's a third type of partnership, which is more to leverage some sort of technology or to solve a specific use case, which could be with a startup, with a fintech, somebody who's solving a very, very specific use case in a rural economy. So across those 3 partnerships, we have seen various kind of models come up. Baskar just talked about a very interesting model that they have created along with FINO, and Rishi would love to hear from you both about how that partnership has evolved, as well as in general how have partnerships fared, and what kind of partnership business models you see coming up in rural areas in India.
Thank you, Hemant, and thank you, Baskar, for the opening remarks. I think in this world of 2020 plus, and especially when we talk about rural, I don't see a world where you can build businesses without partnerships. It doesn't make any sense to build everything on their own. There are enough and more institutions, organizations with whom you can partner. Bhaskar just talked about one partnership which we have with Suryoday. We are also getting into another partnership on fixed deposits. So it's not about one partner, it's about deeper partnerships around different same organization. In fact, I'm privileged to sit on my left is Union Bank. Mr. Nidhu Saxena is there, and we have a partnership, a relationship with Union Bank for the last 15-16 years. In fact, one of the reasons for FINO to be successful is the BC relationship which FINO built up with a lot of banks, and Union Bank has been one of our prime partners on that. So we service large geographies, the hinterlands of India, where we are able to service the Union Bank customers on the ground. So when you talk about partnerships at a global level, we have a partnership with BPCL. BPCL is one of the largest oil marketing company in the country. They have some 20-30 million people who walk into their petrol pumps every day in, day out. So we are using their petrol pumps to provide financial services on the same platform. Then on the local level, we have partnership with local merchants who are there. About 12.2 lakh merchants partnership is there. We convert them into a banking point, and that banking point can do all kinds of your basic banking services and deliveries. And on top of it, I think what sits is the technology integration which happens. I can't visualize a partnership with Baskar or with Union Bank without the technology integration. It's a very deep technology integration where both the systems are talking to each other, and we are able to provide service on the ground seamlessly. And the kind of services which we are providing, the infrastructure in rural obviously has substantially improved in the last 5-7 years, but still it is not as good, as robust as what is there. And the level of people we are talking about is also, the level of education and the level is not that high. So looking at that, technology plays a very integral part of the entire ecosystem. So both technology and partnerships, I would say, is the driving force, not only for rural business, but for all kinds of businesses. And then your partnership around multiple products, your partnership around insurance, mutual funds. So what is the need of creating your own ecosystem when there are partners with whom you can work and build up an ecosystem? What is important is that you need to sell the right kind of product to the right audience at the right price. So that is important, and if your partner can help you provide that, and through technology you can enable it, then I think there cannot be a better model than this. In fact, the entire FINO model, one of the reasons of it to be successful is also the fact that we have built up a very low cost fixed as well as fixed cost model. So the ability to scale that model is very high without incurring too much of cost. That is only possible through technologies and partnerships.
So I think very, I would say, insightful remarks by Rishi about partnerships. And if you look at the rural business models, some of the challenges around the cost to serve, they have been solved largely through partnerships, and partnerships have taken many forms. He talked about a BC model. He talked about another partnership, for example, with Baskar's bank as well. And some of those partnerships, once you build the initial model, and I think both partnerships have been there for almost a decade now, almost like 7-8 years. So these partnerships grow, and you can think through many other use cases. One thing that Rishi mentioned and he talked about, I think is sort of the bedrock of creating these business models, is the technology. The technology provides that integrated user experience even in partnerships, and technology ensures that the reach is there at a lower cost to serve without compromising the richness of the service, which is the high touch, which is very important in the rural area. So from a technology perspective, I would love to hear from Mr. Venkatramu on what role has technology played, because India Post literally was like a postal service, and from there you have created a bank, and it's not a small bank. It's like a bank that is literally spread over through many rural areas as well as the towns and cities. So what role is technology today playing in the growth of financial services in rural areas?
Yeah, so technology actually played a very important role, especially when it comes to the distribution might of the Department of Post. Probably without technology, I can admit that we don't exist. With technology, what actually happened is, one is it has various components of technology. When we say technology, it is also in the form of the handsets, it's in the form of connectivity, and it's in the form of the applications, where you're able to harness technology in various form factors in order to provide that service at the last mile. So for instance, in our case, every postman today is like Prime Minister Modi ji says that Chalta Firta Bank. I mean, that's what we could make out of technology. I think that's the real success story that we can talk about. But it does not stop there. I mean, it's all about how can you maximize the number of products and services. As Rishi rightly said, that it's all about providing right product at right price to the right customer. So it's more about product customization. So wherever we've seen the right kind of product is being sold through this technology and distribution rails, the scale will automatically be achieved. Be it a product like APS. I mean, APS is one successful product wherein we've seen that G2P payments being routed through APS rails. Similarly, UPI is another such enabler that actually increased the total number of transactions. So all these put together will add to the might of the products, and it gives scale. It gives the kind of scale that is required. And I can also quote one other example from our recent experience. So one of the insurance partners that we have partnered with, we've launched a very low value premium product, and we were struggling to sell insurance as a product. And with this product, we were able to almost generate an income level of 3 to 4 crores per month, wherein we were hardly able to do 3 to 4 lakhs a month earlier. So that's the kind of product customization using technology it can happen. And similarly in the credit also, we need to come up with that micro value credits, which can probably digitize more.
No, I think so. Mr. Venkatramu, I think this is the role of technology is we can have no conversation today about financial services without talking something about technology. And all of us bankers probably if we haven't already, we will need to know technology in some form. One question that I have specifically from a follow-on question is specifically for rural economy. How do you see adoption when you have there are some challenges still in terms of the reach of bandwidth issues. There is vernacular in India, many languages. There is whole digital learning curve. How do you sort of run through those challenges even in an assisted model? I'm not talking about a self-serve model, but even an assisted model. How have you, because you have like an army of postmen, and even if you are using an assisted model and you are getting the organization familiarized with technology, how have you handled that part of adoption?
Yeah, there again, there are a couple of models that we could adopt. One is the element of training plays a very important role. Like how well you train the end user plays a very important role. That apart, utilizing technology in how many languages you are able to deliver these services, and more importantly the screen flows. Most of these services are done through assisted mechanism. So wherein as long as the end user is trained completely about the whole process and he's understood about the whole product, it's quite easy, because then the rest of the effort is taken by the postman, because he's a trusted partner, he's a trusted man in the local community. So that way that end legwork is done by the postman.
Very good, thank you. Mr. Saxena, I had a question going back to the partnership, and Rishi talked about the whole partnership that they have had with Union Bank, for example. There is also the co-lending model that RBI has come up with, and it's been particularly relevant to, let's say, tier 5, tier 4, tier 5 towns, as well as rural areas. What role do you see some of these co-lending models where different players come together to fund, to bring different capabilities? How do you see, what role do you see that playing in rural financial services?
Yes, Hemant, I think so far the discussion, we are trying to see how the financial services in the rural areas can be augmented. And definitely the answers that are emerging, one is the partnerships. And the second, I feel, is leveraging on the technology to enable to do us making these partnerships more and more effective. But if we have to understand, so why these partnerships are important, today there are, I think, in the rural segment, we will have three key players who would be impacting these financial services that are getting delivered in the rural areas. So these are the banks, the non-banks, NBFCs and MFIs, and the fintechs. So each one of these partners, each one of these players have their own strengths and challenges when they operate in this rural areas. So if you talk of banks, so banks are having financial resource with them. They have access to low cost of funds. But the challenge in terms of banks, despite our spread network of branches, we still have a challenge to reach out to the population. If you look at the data, 65% of the Indian population resides in the rural areas. So it's a big challenge to reach out to all of them for the banks. Also, here when we are talking of rural areas, it is the low ticket size. So it's a challenge again for the banks when they are to process low ticket size loans. In huge numbers, they will have to do it. They will have to take use of technology. They are doing it, but here again, partnership maybe is going to get some solutions for them. There'll be other areas if the bank has to look at lending in the rural areas more aggressively. We don't have credit history readily available for most of the clients. Most of the prospects don't have a credit history where we can look at. And maybe if we are going to plan for secured lending, so maybe they don't have collaterals because agricultural land is predominantly there and it is not surfacey enforceable. So these are the challenges. But when you look at the other player, the non-banks, the NBFCs and MFIs, I think to a large extent they are having the disadvantage of high cost of borrowings, but they have good reach in terms of the geography they are servicing. They are handling low ticket size loans, and they have in fact already developed a lot of technologies around monitoring this portfolio, dispensing low ticket size loans, and their collection efficiency is far better. They are spending a huge amount of resources. Around 6% of the cost for an NBFC is towards the collection function. So these are the strengths the NBFCs would have. The third key player which I look at is the fintechs. We have seen emergence of fintechs in the rural areas in many ways, and definitely they have technology built around dealing with low ticket size loans. We have seen examples. We have seen how they have got results in loan ticket size in urban and even the metro areas, where ticket size of 6,000, 10,000 loans in huge numbers they've been able to, with the help of technology and analytic based funding, they're been doing it. So they can also solve the problems of the low ticket size which is there in the rural areas. So what is important is each player has its own strengths, has its own set of challenges. It is for us to collaborate with each other, build some suitable partnerships, and try and find answers to these problems, try and find solutions to these problems, and then you will see that the end result of augmenting the financial services delivery in the rural areas is going to go up. And most of this is going to take help of technology. There is absolutely no doubt on that. We need technology to run a model like co-lending model. So co-lending has been one of the improvements with Reserve Bank of India introduced through their circular in November 2020, when the original model of co-origination was in place, and they found that it is having some problems, it is having some issues, and it is not able to deliver results at the ground. So one or two major issues this co-lending model has addressed. So there is no minimum holding period. A bank and an NBFC can decide and agree to do co-lending on a back-to-back basis. So a loan which is extended by NBFC yesterday can come to the bank in terms of a co-lending today, and 80% of share goes back to the NBFC. It remains in the books of the banks. So I think the co-lending model is a very workable model. Yes, there will be some issues around the reconciliation and how the transactions actually take place. But here again, technology will give solutions, and the fintechs will play a good role to provide the platform for co-lending. So I think co-lending as a model can definitely be, it has been producing results. Some hiccups are there, but I think way forward co-lending can be a good solution. for all the players for the financial services augmentation, the rural areas.
Yeah. And sir, rightly said, we need innovative structures like co-lending to fund the rural lending needs. I think Venkatramu had mentioned about this insurance product, which took off in the whole, the India Post Bank, and it was a bit of a surprise. It sounded like, that this product is also selling in the rural areas. So I want to ask you, Royston, customers evolve, and while rural economy historically has had very limited needs, and we have mostly focused on payment and lending, and that's also very, very standardized lending. If we look at, for example, how Chinese economy has come up, Royston. So how Chinese economy has come up, and how rural transformation has happened. The needs have grown to micro insurance, to simple investments, savings, beyond payments and simple lending. And then there are a whole lot of things around sanitation, around, for example, solar energy panels, which need to, again, those kind of loans to fund those also, need to grow. So how do you see the product set getting evolved? Because historically, majority of financial institutions have taken standardized products, which they sort of mass produce, and they have pushed those into rural areas. How do you see that changing over time?
I think the game changer is in the title of the session. When we talk about reimagining rural financial, it's not about trying to force fit what works in the urban and then tweak it slightly to the rural. And I think, if you really talk about reimagining and game changing, then I want to go back to my roots and, see what Grameen did 30 years ago. Microfinance turned the lending model on its head. It said you don't need to have a bank track record, you don't need to have collateral, you don't need to have all the things that banks wanted at that time. What are we now designing that is going to be equally path-breaking? The governor yesterday talked about a pilot in Tamil Nadu where he said that it's going to be end-to-end digital, where on the mobile, the farmer is going to ask for a loan, then it's going to ping a system, which is AI algorithm will pull out a scorecard, then a distributed ledger technology, which will be mapped to a blockchain with the land, will track whether that, fertile or the fertility of the land will provide certain cover. And, that whole process, which is going to be in real time, and then, credit his account. That is, I think, what we need to be solving for. 400 million people have gone below the poverty line because of COVID. We seem to be talking in an echo chamber of all the nice things which are very good. But who is really challenging ourselves to say what is going to be needed to actually pull masses out of poverty? While, cosmetic and improvements can always help, where is the next big idea coming? How do we create financial products that need to pull people out of poverty, that need to give livelihoods, that need to create toilets, that need to create farm ponds, that need to put solar panels? So where is that financial engineering that is going to be new and unique for rural India as opposed to urban India with 2 zeros less, or urban India with, XYZ tweaks? And I think that is something that I would like to challenge ourselves. And, who is thinking through those new models? India is going to be at a cusp of the presidency of the G20 next year. 4 weeks ago, Achim Steiner and Antonio Guterres said that we need to save the SDGs. So, who is solving for those aspects where rural finance needs to be reimagined? How do we fund, solar panels in such a way that we can say capture the carbon saves and use it to pay the coupon that, Rishi needs or Baskar needs or Union Bank needs? How do we solve for those type of, products that come under microfinance? Microfinance and microcredit is not the same. You talked about microinsurance, micro mutual funds, the whole aspect of creating new products needs a completely different paradigm. And we have on this panel people who are uniquely situated to be able to reimagine those products. And we shouldn't get trapped in, it's working with the urban, it's easy to copy, paste, let's just do it because it's going to help the bottom line. How can it help the planet? How can it help future generations? Can we do that and that at the same time? And I think I want to challenge us to think those thoughts.
So, sorry, it's very interesting actually when I was hearing Royston who's going to challenge. See, this kind of discussions happen every decade and bound to happen, and we should have these healthy discussions. So FINO to an extent, or a BC model to an extent 15, 16 years back was a birth because of some of this discussion which happened, that how can you make banking accessible to every nook and corner of the country? How can you make bankers can't go out of the branches? The customers can't come to the branches. How can you make bank possible, reach the last mile of a customer at his doorsteps? And one could not imagine 20 years back that there can be a model in which you go to your local kirana shop and you are able to do your banking services. So this is one such kind of innovation in a way. Another thing which you mentioned also, that one could never imagine that you can't do banking without a debit card or going to a branch. Now you can do banking on your fingerprints. So, and millions, the entire government grants of 10,000 crores every month during the COVID happened through the entire EPS mechanism. So some of those things which we are talking about today, which seems to be very routine things, were things which we discussed 10 years, 15 years back, and we have really made it possible. Who knows today what we are discussing about blockchain and all that looks very fancy. Half of the people, including me, probably don't understand it. But having said that, this could become the norm of the day. Data-driven lending could become the focus areas. There could be institutions which will come, which will build up the data around the saving profile of a customer, and then you can cross-sell. Micro-insurance, micro-lending could become the order of the day. So what is important, and that goes back to your original question in terms of how do we make it possible. Actually, first of all, we have to challenge ourselves that it is possible. Fortunately, we have a government, we have a regulator which is very futuristic, which is thinking in that fashion that we should try different models. The entire UPI, to that extent, is again a birth child of some of those discussions which has happened. It is now nearly 725 crores worth of transactions are happening. So I would say that a lot of work is happening. The audience should not go back from here thinking that no work is happening. A lot of work is happening. Obviously, we need to do more. But I think we are, as a regulator, as an institution, as a country, we are in the right step, in the right direction, so to say.
Certainly, I think over the last decade, with not only with microfinance, with UPI, we have seen a whole lot of transformation across payment and lending space in rural areas. One thing I want to say is the cost of technology reduces every year, and there are various numbers like from 5 to 10%, but the cost of technology keeps going down. And the adoption, if you look at the adoption of intuitive apps, nobody had to learn Uber, or nobody had to learn even, some of the UPI apps. Even 70 plus older people, a lot of rural people, they are able to use it because fairly intuitive apps. Some of the microfinance entities in Africa, I'm aware, are using pictorial apps, which do not even need a literacy for you to be able to use it. So it's technology is definitely turning, some of the things on its head. One thing I'm going to do is, starting with Royston, I'm going to put you on a spot, and I'm going to ask you to name, one entity or any fintech, startup, or any even larger entity that is doing something very interesting in terms of a use case in the rural areas that you found like, wow, this is something, this is mind-boggling.
I would not, I would not say Grameen, but I would want to say someone who's not in the rural space. I want to call out Monetary Authority of Singapore and the regulatory sandbox. I think we need to be able to look at sandboxes which give flexibility. All of us sitting on the panel have benefited tremendously from the RBI putting microfinance in priority sector. It opened the floodgates for funding, for debt to come into microfinance. We need a lot more regulatory innovation to be able to drive financing products that are unique to the rural market. So the ability for us to create a regulatory sandbox which allows us flexibility to design products that could be blockchain enabled, that could be tech enabled, that could cut across multiple SDGs. I think that's the messaging really, that there's a lot happening, there's a lot we can pat ourselves on the back for, but the pace that we need to change, the pace that we have leadership opportunity for the rest of the world, the fact that, everyone's staring down the barrel globally. India seems to be a bright spot. I just spoke at The Hague and then at San Francisco 2 weeks in a row. And everywhere there seems to be doom and gloom about the numbers getting added to the poverty pot post-COVID and now with inflation and fuel and food prices. Whereas we have an opportunity to say, how do we leverage on technology that we have? How do we leverage on the distribution that people like Baskar and Rishi have through our microfinance network? I used to chair the microfinance network, Sadhan, when we reached 60 million clients, which is just 60 million households, so 300 million people. How do we build over what we already have? Why are we reinventing often, for water, for sanitation, for energy, for separate pools, when we have this base already? Can we build a little more regulatory clarity? And one last point is, can we just scrap all the different definitions? CSR has a different set of rules. PSL has a different set of rules. SEBI under SVCF has a different set of rules. Just scrap all of those and have 117 SDGs with 169 indicators. If 193 countries have agreed to those terms, then that should become the developmental plank for everything that is development. That may be a simple way to move forward.
So some of the regulatory enablers would certainly be helpful. And one thing I would say is having participated in some of these sessions across different countries, what India has done in terms of creating the public digital infrastructures over the last few years has been phenomenal. The question is, what's the big thing for rural, which could fairly. I'm going to ask you the same thing, Venkatramu. What is one, like any organization that you found it very impressive what they're doing in rural areas? It could be financial services, non-financial services, but something you saw and you were quite impressed with. So I'm going to come back to all of you, put you on the spot on that.
Okay, I think it's not just one organization. I would see that since we're talking about more on technology, especially some of the work done by the agri-tech companies is really commendable. Like they're really trying to get to the bottom of the problem statement, especially whatever that farmer faces in terms of the entire crop life cycle, whether it is market linkage or providing some sort of technical support in terms of forecasting, weather forecasting and things like that. I think there again, as Royston rightly said, it's more about how do you collaborate across these segments and sectors and give a wholesome solution. That probably has got a bright future.
Yeah, and I would agree. I mean, some of those that I have seen, for example, I was talking about one of the companies that is purely looking at shrimp farming, and they have solved the entire problem statement around shrimp farming, and now they have gotten financing partnerships. There are a couple of firms now working on satellite data. And satellite data is available vastly, but what you do with satellite data is very, very impressive, the kind of analytics that you can generate with it. So over to you, Nidhu.
I think, Hemant, what you're trying to prompt, and I would like to share, one of the use case where we could partner with a fintech, and what we have developed and made functional, a product where KCC loans typically up to 1,60,000, they undergo auto renewal. So there's a STP journey, and it's a consent-based auto renewal facility that has been enabled. And simple, the process goes that the eKYC verification is Aadhaar-based, OTP-based, and once that is done, then there is API integration that is working, and we have integration with the state land records. We are able to locate the land, basis the geotagging. We can even through that integration know as to what cropping has been done in that land parcel, and we know what the scale of finance is and what crop that the farmer is proposing to grow there, and basis that we are able to do the assessment also, and we can close the entire thing and do the auto renewal through this STP mode. While this was developed in the bank with this partnership, we are happy to also be partnering now actively with the RBI Innovation Hub, where they have said why only renewal why not we can go ahead and do fresh sanctions. So that pilot has also been done, and we have successfully done this pilot in one center, and there was a mention in the Honorable Governor's address as well yesterday. We all heard that, and we are trying to, some challenges that are from the technology side, from the business side, which are going to get addressed very soon, and we are able to replicate this and make it upscale and go actually cover the major part, because KCC up to 1,60,000, around 80-90% of accounts are covered under this segment alone. So lot of workload from the branches is going to be taken care of by the technology, and the branch and the resources can focus on other areas of business better. So this is one use case which has been made functional, and
I think that's a great example, Nidhu, of, and this is a great example of actually looking at how do you reduce the cost of servicing in rural areas. It's not just improving customer experience, also reducing the cost, overall cost of service, which makes the models that much more viable, and which allows you to do at a micro level, micro credit, micro insurance, because lower ticket size products in rural areas. So Rishi, before we open up to audience, besides FINO, and I have to say that because you'll definitely name FINO, which other? No, that's why I said besides FINO and Suryoday. Okay, let me make it very clear. Which other such example can you give?
So I would say it will be unfair to name a few companies or one company, but what I would say is if I look at the ecosystem over the last 15-16 years from the time I've been with FINO, and initially it was so difficult to get investors' interest specifically for rural technology, rural-based companies, because people did not see there is any money at the bottom of the pyramid. And fortunately, what has happened through technologies, through partnerships, through innovations, through also the fact there is competition in urban has intensified so much that people and banks have no choice but to look at rural as the second big avenue of growth and opportunities. So we are seeing some money and some investors getting interested in rural. Obviously, rural is a high volume, low value game, and it is going to take a long time for the models to become viable and sustainable over a period of time. But I would say not across only fintechs predominantly, because we work with a lot of companies. We see logistics companies, we see agri-tech, obviously NBFCs and MFIs have been there in rural for a very long time. But even e-commerce companies during this big $1 billion sale of Flipkart, because we manage a lot of payment services for Flipkart, we could see a big surge in demand from tier 3, tier 4. So across the geographies, across the industries, I would say, to me, the leader in the pack has been the consumer companies. So bankers have always been very banker kind of attitude. Conservative. Not only conservative, very lazy kind of attitude also, from the fact that customers are used to come to a branch and do transactions. To go out and do banking has never been the forte of a banker. But the fact that consumer companies cited these opportunities far ahead of the banking or other communities or other industries. So consumer tech companies like Godrej and others have really done a wonderful job in terms of saturating themselves into the deep geographies of the rural India. I think those are companies which come to my mind as a role model, where you see opportunities not now but 10 years, 20 years down the line. And that is where we see that a lot of this ecosystem which is getting built up, again coming back to Hemant, to your point of partnerships. So there is a lot of partnership ecosystem which will come up, especially in the rural India, and that will make all of us viable, scalable, sustainable over a period of time.
Yeah, so consumer companies, I think you are right. I mean, right from the 70s, 80s, they have been thinking about how to make the rural business more sustainable. They
build products around it.
They build products around it. They build distribution around it. They think through logistics. They think through, even the changing.
The entire sachetization which happened because of the fact that how can you make this shampoo available at the lowest price. The Asian Paints example of making paint available rather than the supply chain issues at the far end of the country. So those are real innovation which has happened.
Definitely. So, Baskar, if you can give us your example and take us home.
Undoubtedly NPCI, a not-for-profit organization, reimagining the whole thing, getting the support of the bankers who are willing to kind of see the whole so-called forte competitive advantage of holding the customer cracking. Instead of doing innovation after innovation to a point where I think now NPCI will have to tell us that, hey, hold innovation for a moment, because by the time you catch up with one, they've kind of already rolled out another. I think that sachetization, democratically doing it, and by a not-for-profit company in a high technology-oriented environment, is, I still don't understand how could they have really created that kind of a vibrant culture to deliver where everybody could afford it. I would say that they are really worth the leader of the pack.
I think that's a great example. And the other thing NPCI has done is they have shown the light. They've become the lighthouse for many such, now Open, ONDC, everything is being taught in an NPCI way of creating that common public digital infrastructure and then letting the user experience be driven by individual companies that can compete with each other. So that model is fairly interesting. And I've seen I've been to a meeting in Google where people were talking about it, and they were talking about it in the way it has come up, and people didn't expect the kind of adoption that happened. So fairly interesting example. I want to see how much time we have, and then open it up to maybe a few questions. So
just one small thing that I think when we are discussing technology, let's also realize that I think in the recent past, lot of infrastructure has been already developed in terms of technology, and there are some very interesting data points. If you want to, I'd like to share. It comes to my mind. We have 6 lakh villages, and only 25,000 villages are left where the mobile internet connectivity has not yet reached. This is the data of somewhere I read Jan 22. So I'm sure that is also getting covered and must be really far-flung areas and maybe Naxal-prone where the connectivity is not reaching. And they may also, you may have the latest figures with you. And very interesting that 28% of rural population is handling internet-enabled smartphones. So these are the ready customers who can be ready clients who can be quickly onboarded to this new medium. And others here, when we are talking the what technology can enable, and yes, I think lot of things need to parallelly happen in terms of improving the technology adoption in the rural areas. So lot of customer education, creating awareness, and even the concerns of cyber security, those things also would be coming as we are going with higher adoption of technology. Those issues also will have to be taken care of. And somehow one more important thing, like I shared the example of doing KCC loans up to 1,60,000. Why we are not going beyond? Because we require a mortgage of the land. So to do that, lot of physical data is there which needs to be digitized. So as in when we progress in digitizing all this physical data, so use of AI, ML and blockchain technology, they will help you do secured lending also. That was also one of the points that we heard in Governor's address. So I think as these things progress and as the adoption of technology is made more and more, so we'll find a lot of solutions to our issues.
No, great point, I think. Thank you. I just want to...
Hello. Yeah, whenever we talk about the rural banking or financial services ecosystem, we always seem to be discussing, banks, MFIs and fintechs. But there is a whole ecosystem which probably is much more robust than the three. The first is obviously, related to the banks, which is RRBs, regional rural banks. The second is the cooperative banks. The third is the state cooperative banks, the NABARD universe, which is the district central cooperative banks. And the final is the primary agricultural credit society. Now, when you are evolving models like co-lending, how does, why don't we actually utilize this entire ecosystem to your advantage? And I think very little has been done about this. And my surmise is that, it's purely lack of knowledge amongst, urban bankers.
My quick take on this particular aspect is, it's a very good infrastructure. But unfortunately, it comes to the same answer about technology. See, how you are implementing or harnessing technology is what actually matters. Unfortunately, for this segment of institutions.
No, I beg to differ very strongly on this, because I ran India's largest rural banking payments technology services company way back in 2014-16, where we got 600 such banks and primary agriculture, onto the payments platform of NPCI, issuing 2 crore RuPay cards. So the payment ecosystem for all of these banks has been done 8 years ago. So it's about time that, the overall sort of stakeholders think about how do you actually utilize this to primarily, get the, lending, etc., other services onto the platform.
I think you are right to say that there is a whole gamut of entities, whole gamut of infrastructure. So the banks, the non-banks, the cooperative banks, the RRBs, all put together are. But I think we can look at success if we are able to migrate from the informal channel, the money lenders channel, to this formal channel. That should be a benchmark. That should be the parameter to see that whether our efforts to augment financial services in the rural areas is happening or not. Because when they are going into the informal segment, we all know that they end up paying very huge charges. So if they are somehow coming to this formal sector, they will be getting the advantages and benefits of the lower rates and other associated benefits, creating a credit history for themselves, and way forward they can scale up their operations and get funding also.
So I think we can just take one more question, if any other question from the audience.
Oh, I introduced myself in the last session, so I'll not repeat that. I would like to react to Mr. Rishi's statement, last statement, very strong statement about the competencies of the bank in reaching out to different retail type of products. See, banks are not in the space of selling those products. You cannot compare banks with the competency or level of the Asian Paints or any other such type of Godrej. So I see two of the institutions sitting there because of lending support from CDB and ICSA in the form of microfinance institution support, which was provided by the banks in the form to develop microfinance institutions. So I need not be there in every space, but I can be better effective by way of partnership with these or those institutions. So rather than developing my own competence in those areas which are niche area where only these two gentlemen, they have expertise, I can be there as a supporter to do that, to provide my services through these agencies and through the agency, through your mechanism also. Right.
Certainly, I think Rishi talked about those partnerships and and the co-lending and everything. And I think the example that Rishi was talking about, and from a consumer perspective, is how do you make those sachet-sized products profitable? Which basically means how do you make small ticket size profitable in rural areas, and that will happen with technology. That will happen as you sort of reduce the cost of serve. I just want to check. I think we are out of time, or can we take one more question? Okay, one last question. I think there was...
My name is Sandesh. What is 2023 budget? What is new attract to foreign investor to invest in for banking sector?
Sorry, I didn't understand.
What is the attraction for foreign investor to invest in banking sector?
Yeah.
In banking.
I think the banking sector itself, you can see, is the bank nifty is at the highest, and the fact that the earlier issues around provisioning and everything has been sorted. The banks are well capitalized, both the public sector, private sector banks. So I think we are seeing a lot of foreign investors' interest in banks per se. But maybe you can answer it better in what is happening.
I think it will be a little bit out of the context of what the panel discussion is, but maybe the first impression that can be given, yes, banking industry is passing through a good phase, and where we've seen the ills of high NPAs and a higher requirement of provisionings and higher credit cost, those are all getting towards the improvement only. And way forward, the kind of credit growth that is experienced, if you are looking at the numbers of the half-year numbers of most of the banks, and it is all double-digit, indicating that things have really shown improvements. So all these positives can, be something as an investor viewing positively.
I would also want to add that the ESG lens that a lot of investors are now looking at is something that we need to think about, how we are working within the context of ESG and SDG, and that's going to be important. A lot of pension funds, a lot of global funds have very strong ESG focus, and that is something that's going to drive valuations pretty significant.
I think ESG is very important, and that we see a lot of foreign investors, given their funding sources, they're constrained to have certain proportion of ESG, so that definitely is critical. But I think he was looking for a stock recommendation, given. I'm just. All right. So I think we'll close the session with this. Thank you so much. This has been very, very informative.